The price of gold is plummeting and silver is following suit. Sounds strange, doesn't it? What's going on with these precious metals that have always been considered a safe haven? Let's explore the hidden forces that are causing these values to plummet. Do you know what's really behind it? The American economy is on a roller coaster. Interest rates are rising, the dollar is getting stronger, and demand for gold and silver is evaporating. But is that all? Why are investors around the world moving away from these assets? And how does it affect you and your money? It's a free fall that no one predicted, and the reasons are surprising. Can you imagine the impact of global economic decisions on the value of your investments? Central banks, monetary policies, and even the post-pandemic recovery are shaping the market in unexpected ways. Are you ready to uncover the secrets that big investors are trying to hide? Stay tuned, because we're going to unravel this plot and reveal why gold and silver are losing their luster. If you are enjoying this content, I ask you to subscribe to my channel and help me continue to grow and bring more relevant content. Continuing, the influence of interest rates on the U.S. economy. Imagine waking up to find that your gold investment has lost value overnight. It's a scary scenario, but it's becoming increasingly common as interest rates in the United States continue to rise. When interest rates rise, government bonds and other forms of investment become more attractive, driving investors away from precious metals. This change in the behavior of U.S. investors is a crucial factor in the recent drop in gold and silver prices. But why are investors turning away from gold and silver? The answer lies in the higher rates of return offered by other investments. With treasuries offering more competitive yields, gold, which does not generate interest, loses its appeal. This phenomenon is amplified by a recovering U.S. economy, where investors are increasingly confident in putting their money into assets that offer better returns in the short and medium term. The decision to raise interest rates is not taken lightly. Economic policymakers in the United States are focused on controlling inflation and stimulating economic growth. This adjustment in interest rates is a direct response to domestic economic and political pressures. The immediate impact is a reassessment of investment portfolios, with gold and silver being some of the first casualties of this new economic strategy. Strength of the U.S. dollar in the international market. Ever wondered how the strength of the dollar can impact your investments? When the U.S. dollar strengthens, it becomes more expensive for foreign investors to buy gold and silver. Recently, the monetary policy of the United States has strengthened the dollar, which contributes to the fall in the prices of precious metals. This strengthening reflects renewed confidence in the U.S. economy, but it also means that investors are less inclined to look to gold and silver as safe havens. The impact of the dollar's strength is twofold. Firstly, it makes gold and silver less accessible to investors outside the United States, reducing global demand. Second, the appreciation of the dollar increases U.S. investors' confidence in dollar-denominated assets such as stocks and bonds. This shift of global and domestic demand for precious metals to other, more lucrative investments is putting downward pressure on gold and silver prices. But what's really behind the dollar's appreciation? U.S. economic policies, including interest rate hikes and fiscal stimulus, are strengthening the currency. This robust policy is attracting international investment to U.S. assets, further increasing the demand for dollars. This appreciation cycle is having a ripple effect on precious metals prices, decreasing in value as the dollar strengthens. Slowdown in industrial and jewelry demand. Imagine you're an electronics manufacturer or a jeweler, and all of a sudden, the demand for your products drops dramatically. This is the scenario faced by many sectors that rely on gold and silver. Gold and silver are not just investments. They have industrial uses and are highly sought after in jewelry making. However, a slowdown in industrial and jewelry demand, especially in key markets such as the U.S., significantly impacts their prices. The slowdown in electronics manufacturing and lower consumption of luxury jewelry is directly linked to changing consumer priorities. With the pandemic reconfiguring spending habits, many Americans are choosing to save or invest in other areas, leaving out non-essential items like jewelry and high-end electronics. This change in behavior is reducing demand for gold and silver, resulting in lower prices for these precious metals. This phenomenon is not just a matter of consumer preference. Supply chains are also struggling with material shortages and production disruptions. These barriers are decreasing production capacity and, consequently, the demand for precious metals used in these products. The combination of lower consumer demand and supply chain issues is creating a challenging backdrop for gold and silver prices. Inflation expectations and control measures. Gold is traditionally seen as a hedge against inflation. But what happens when inflation expectations change? With central banks adopting strict measures to control inflation, future inflation expectations fall. This reduces gold's appeal as a hedge, leading to a significant sell-off in these assets. In the United States, confidence in anti-inflationary policies is high, contributing to the fall in gold and silver prices. Inflation expectations are a powerful force in financial markets. When investors believe that inflation will be brought under control, they are less likely to buy gold as a hedge. Recent actions by central banks, including rate hikes and other inflation-controlling measures, are creating a perception that inflation is under control. This sentiment is decreasing the demand for gold, leading to a drop in prices. In addition, the economic policy of the United States is focused on keeping inflation low and stable. This commitment to economic stability is convincing investors that gold is no longer needed as an insurance against inflation. Confidence in government policies is restructuring investment portfolios, with gold and silver being less favored. This realignment is putting downward pressure on precious metals prices. The post-pandemic economic recovery. With the economic recovery gaining momentum after the pandemic, investors are moving to riskier, higher return assets. The U.S. economy is showing signs of recovery, with increases in employment and GDP growth. This economic optimism is diverting capital away from precious metals and into stocks and other more profitable investments. The recovery also lessens the need for safe havens such as gold and silver, putting downward pressure on their prices. The economic recovery is bringing new enthusiasm to the investment market. With the U.S. economy on the rise, investors are increasingly willing to take on greater risks in pursuit of higher returns. This movement of capital is redirecting funds that were previously in gold and silver to stocks, startups, and other promising ventures. This redirection of capital is reducing demand for precious metals, resulting in lower prices. This scenario is not just limited to the United States. The global economic recovery is also influencing gold and silver prices. With economies around the world recovering, investor confidence is increasing, decreasing the need to hold large reserves of precious metals. This global effect is contributing to the drop in prices, reflecting a world transitioning to a new post-pandemic economic era. The fall in gold and silver prices is a red flag for all investors. But what's next? Will these precious metals regain their value or continue on this downward trajectory? The answers lie between the lines of the global economy and the actions of the big players in the market. As long as interest rates continue to rise and the dollar strengthens, movements in the financial market are unpredictable. What would you do if you knew that the next economic decisions could completely transform the investment landscape? This is the time to be aware of changes and prepare for opportunities that may arise. The history of gold and silver is far from over. Every fluctuation, every political decision, every market movement is a piece of this complex puzzle. Want to understand more about how to protect your investments and take advantage of the next big opportunities? Follow along, because the next chapters of this saga promise to be even more revealing.